What's up guys, welcome back to another episode of Sniper Sundays. This is a series where we go over all of the trades taken inside the VIP signals and analysis group, going over the trades whether they won, lost or broke even, showing you guys all of the profits that we're making and keeping a track of that as we go along, as well as showing the strategies used to make these profits. This will be an educational breakdown of all the trades taken, showing why we took them, where the entry was, stop loss, take profit, and then showing you guys how trading is done properly, essentially. So in this week's video, we've got 2 weeks to cover because I didn't post it last Sunday. So let's get straight into it. Hopefully it's not going to be too long of a video that you don't watch all the way through. So I'm trying to balance out like the length of the video with also providing as much value as possible. But I feel like, we're on episode 11 now. There's plenty of these videos for you to go back over and see all the details. Like there's so much education and so much value given away in these videos. So I'm going to focus a lot more now on just showing you the trades. And if you want more gems in terms of like extra confluences and stuff, you've got 11 videos from this point to go over that stuff as well. So let's kick things straight off. In this past 2 weeks, it's like been up and down. We've hit more stop losses than usual, but then we've also hit some pretty nice wins as well to keep the returns flowing. So the day trading strategy hasn't really been as good as it usually is. But our intraday strategy has saved us, essentially. So that's going to be the overall theme of the video. But kicking things straight off, we've got a dollar Swiss day trade where we hit a stop loss. So let me just go get that one up now. So I'll load up my clear charts, load up my symbols, and we'll take a look at dollar Swiss. This one will be on the 1 hour time frame. And this one was sent out on the 17th of March at about 9 AM. So we'll go find that now, 17th of March at about 9 AM. Let's go find it. Okay, so I've actually got my analysis set up, I believe. That was for our first trade. So you would have saw a trade that we saw before where we had this descending trend line. That trend broke out, retested, broke out. We had a break of substructure. The previous Sniper Sundays, you'll have saw the trade that we caught from within this wick. And we had a nice take profit up there, like that. That one made us like 3 point something %. From that, we were trading the continuation, so I don't need an EMA for this. We were looking at this break of structure, so this is now our third break of structure. So we've got breakout, break of substructure, third break of structure. We were looking to continue this trade on, taking it from this low to this high fib level. It looked nice at first. We had plenty of candlestick rejections, caught a trade here, but unfortunately this one hit the stop loss. We would have targeted that equal high, but unfortunately this one stopped out and lost us 1% there, as you can see. So that was our first trade that we took, minus 1%. Then we had a euro day trade as well. So let me clear that up and then get on the euro. This euro trade was 17th as well, about 3:30. 17th at about 3:30. So this trade, we had this corrective structure, like so, where price was trending. Okay, we're making higher highs and higher lows. Then we had an ABC correction that broke out, retested, and we were looking for this to continue higher, like that essentially. I load up the trade. We were actually, before that happened, sorry, after that happened. Okay, so this was our target for that move, which was sensible. So everything that I just said there was correct about this ABC. Like so, we had that corrective pattern, broke out, retested, push higher. Whenever we look for that schematic, I only target the previous highs of that move. So you can see there that was correct to a T. We didn't push out and extend higher than that, okay? We met the previous highs there and we then looked to go lower. What happened with us clear that off. I'll show you what we were looking at here. So if you can't tell, I'm looking at my other monitor and I'm showing the exact trade here. So this was a 1 hour trade at about 12 on the 17th. Or the 17th was where it stopped out. I believe it was this. So let's mark it up and compare. We were looking at this sort of rising wedge like this here, and then that fell through like that. Then we scale down to the 15-minute. So this was our first break of structure like this. Price broke beneath. Here we formed a break of substructure like so. From that break of substructure, the boss strategy says okay, there's the wave. Take a sell from either the 71 or the 78.6 fib. 71 is what we want. Stops above the high. TP at this previous low, and then unfortunately we got stopped out from that. So price broke, had a break of substructure. We looked to trade it from that retracement up to 71%. Unfortunately that got stopped out this time. So there we held a -1% stop loss. Okay. Next up, pound US dollar TP1 hit. So this is going back to intraday trading, where we had a bit more luck within these past 2 weeks. So we will load up our intraday time frames, and we see pound US dollar long March the 18th at about 9 AM. So I found this one on the pound. Go to the pound, set a little marker there. Okay, so now here's where we use our EMA for this. Okay, so this one was on the 5-minute time frame, as we are. And what we see here is, I'll load up the Asian session for you. We can see that from this Asian session, we had a high printed, we had a low printed, and then it finished in the middle. What happened here was the low of Asia got swept, we pushed higher, and now we're making higher highs and higher lows, like so. So we're looking for London session to continue that trend and keep pushing higher now. So how we caught a trade from this is we plotted our fib from this low to this high up there, like so. So price has done that, and now what we want to see is price come back down, retrace from one of these key fib levels, and be supported by that EMA as well, which is what we saw through this wick rejection of the EMA. We caught a trade from the 71% fib, like that, stops just beneath that low, and TP up at this previous high. Now, the full TP did not get hit, but we managed to take a TP1. So where did we take a TP1? Well, here's where we took a TP1 up there, and the reason for that is because if we take a look on the 15-minute, we can see that the previous candle body high was met at that point. Okay, so where we took a TP1 was about 1.95%, like that, 1.95% secured, right on the wick of that 5-minute time frame there, and that all came from the 15-minute candle body high. So when you're looking at candlesticks, you have like the exact high, and then you've also got where the candle body was essentially. So this is, we stopped it out somewhere around there, somewhere around that top candlestick. We'll just call it 1.95 basically, but that's where our TP2 was hit, TP1 was hit. We took half of our position out there and set the stop loss to break even, just like that. Unfortunately then price reversed and hit our stop loss, But if we didn't do that, and if we didn't have that in our risk management plan, we would have just hit a full stop loss and lost 1%. So whenever you're running up near your TP, it's always smart to just manually close some out or have some partial profit levels set in the market. And for this intraday strategy, using the candle body high rather than the actual high can really save your position sometimes. So there we still managed to make some profit. It was half of that, so about 0.97% we managed to cash out and avoid taking a loss on the rest of the position too. So that's the pound US dollar trade. Next up, we've got the euro US dollar. This one we hit a TP1 and we actually manually closed it out. We didn't need to manually close this one out, as we'll show, but we did just because of how the market was playing that day. But we managed to secure 1.88% from that trade. So let's check that one out now. We'll go back to the euro, just like this. And this next trade is just like that. So this was on the 19th. Let's check that one out. At about 19th at about midday. Cool, just put a line on that. And this was on the 10-minute time frame. Okay, so I'll drop you some gems about the old 10-minute time frame. So we're looking at price here. Okay. What happened with the Asian session is we didn't have a sweep of the Asian high, but price broke beneath the Asian low, then used it as resistance and then continued selling off. So when that happens, so whenever we break Asian low and then bounce off it to continue lower, like that, we're looking for price to keep making lower lows and lower highs, exactly as it did. So that's why we won on this occasion. So looking at the trend, we noticed that the 50 EMA on the 10-minute time frame was bouncing off the EMA, using it as resistance. So we looked for that to happen again here. Now the 50 EMA on the 10-minute time frame is essentially the 100 EMA on the 5-minute time frame. Just to visually prove that for you, let me load that up, because it's just you using multiplying something by 2 and then dividing the other thing by half. So this EMA2 is 100. As you can see, it's the same line if we look on the 5-minute time frame. And I went ahead and deleted that bloody vertical line, didn't I? Let's go back and show that. There you go, we've got the vertical line back on. Get rid of that, load up the 5-minute, and then we'll go back to where we were. Perfect. So, you see that? Exactly the same line. The only difference is now we're looking on the 5-minute time frame, which is essentially what we did, but you can use like the 1 minute and the 2 minute and the 5 minute and the 10 minute, so that you don't have to keep swapping time frames and everything like that. You can just look at one same line and then change your time frames, which is a lot easier than going back in here like this every single time, changing that and then changing this, etc. You don't need to change that, you can just change time frames and then you'll see everything. And don't tell me I've bloody gone and deleted that line again. I have, haven't I? Let's get that vertical line back up. There we go. Alright, we'll look on this as on the 10 minute as we were trading it. And remind me never to delete that line again. There we go. Okay, so as we were saying, the Asian session broke lower, retest, bounce, and then because we had nice resistance from this EMA, all we did, as we do, is take the fib from the last previous high to the last significant low, look for this to come up, show us some candlestick rejections which we had via this shooting star through that EMA, and that told us we were ready to trade. So we took a short from the 71%, stops just above the high, TPs down at this low, down here, just like that. And that was a nice 2.4% trade. But because the markets were playing a little bit divergent between the euro and the pound on this day, so you can rewatch the live on the 19th of March that I did, and you'll see the divergence between the euro and the pound on this day. So it kind of made us a little bit anti-sentiment. Now, as we did before, we took a TP1 from this level, from this candle body, just like that. So that was our TP1, and from that we cashed out 1.88R. This high would have been a little bit closer, the stop would have been a little bit closer, and this on the day we cashed out about 1.88, give or take. Then, because of that divergence between the pound and the euro, we decided to just close the full position there. So let me show you. So that was the first call out of TP, and then we basically just said, look, let's manually take TP2 here and secure the profits, which we did. So we took a full close there and made 1.88%. Even if we didn't do that and decided to just let it run, we would have hit that TP2 anyway, and we would have actually made more money. But I wanted to play it safe and just cash in that 1.88%, and that's exactly what we did. However, the strategy prevailed, and it actually hit the full TP for about 2.45%, something like that. But I thought better safe than sorry on this day, and we cashed it in. Next up, we have a Euro Swiss day trade where we had a stop loss. So let's check that one out. Dollar Swiss, 1 hour, and this was on the 19th. Won't be needing my EMA. 19th in the morning, just like that. Now what we had here is we had this corrective structure like this, where price was selling off, and notice every time it has a pullback, okay, every time it has a pullback, this is how wave structure moves, okay. Price doesn't just move in straight lines like this. Each one of these waves you can break down like this, okay. So once you understand wave structure, you can see how when price is reversing, it's not perfect, but it forms these highs and lows, and you can see when the trend line breaks, and when that trend breaks, that's when you're signaling that you're going to continue off to the downside, okay. So this trade that we took here on this corrective structures breakout, you can see this is our 1 hour trend. This broke beneath, giving us a break of structure. We hop down a time frame like this. This low, I believe, is where we took our first break of structure measurement. Break of structure, I'm looking on the 1 hour here. No, I believe it was a little bit better than that. We took it from those lows, which on the 15 minute looked like that. So that's the break of substructure that we measured. So your substructure, I'll explain it better on the previous videos, but quickly I'll just say that it's the first instance of new structure after an old trend has broken out, essentially. So after this break of substructure, what we look for, like I said on the last example, from this high to this low, we look for that to retrace up to one of our key levels and then sell off again. Unfortunately, we just missed this first trade, okay. It only retraced up to here, but we needed it to come up here to catch a sell. But that would have been a nice trade. We predicted the movement correctly, it just didn't come far enough, high enough for us to get a decent sell. But then from there, we look to trade the next leg, okay. So after that low broke that I've just measured from, we called that another break of structure, giving us this third break of structure. From there, we were really unlucky with this trade, and we took the high from here and the low from here. And the trade that we looked to place was from our key 71% fib, stops just above the high, TP down at the low. And you can see again how we predicted the trade, we predicted the direction, but today on this day, we got a little bit unlucky and we got stopped out with a matter of just 2 pips. Okay, so the direction sentiment was right, the trade was a valid, good idea. We just got swept out and we took a stop loss there. So those are like annoying trades, but you just got to take them on the chin. You'll have plenty of them, but it is a loss essentially. So we lost 1% from that. Next up, we have a pound US dollar day trade. Let's check that one out on the pound. Day trade, and this one was on the 20th, like that, at around about 11 as well. So let's check that out. Oh. Somewhere around about there. This one will be wanting our Asian session and our EMA. Okay, so you can see Asian session broke below, and now it's forming lower lows and lower highs. So what we're expecting following this is London to continue trending lower like that. However, it didn't. London actually consolidated and we had a little double bottom, traded within this little sideways region, and then it was just sideways for the rest of the day before it then continued lower afterwards. So our trade on this, we were looking on the 2-minute time frame. Let's go back to that. And you can see the wave structure was really nice. We broke beneath the London session. We're forming lower lows and lower highs. You can see that EMA is being well respected quite a lot. Okay, but then when we were down here, we were looking for the fib from this high to this low to essentially come back up, bounce off there again, and keep going lower. Unfortunately, it didn't. And this is a trade where we got stopped out. So I believe stops entry would have been from up there. We actually got a very deep entry on this, to be fair, so it was well worth it. Because we didn't have the immediate rejection candlesticks from this zone, we didn't actually trade until we were like all the way up here, after we'd had rejections from up here. So our trade was something like this, and we were taking that for like a 5% trade. So we'll take that any day of the week. It happened to take a stop loss this time, but you'll actually see one of the trades similarly that we took later, where we actually managed to catch a 5.7% trade from that. So these trades, when you're able to catch them deeper with this strategy, worth it every single time. Unfortunately, this one took a stop loss and we lost 1%, but you know, that's just how it goes. So next up, we've got Aussie dollar stop loss. Like I said, we took more stops than we would have liked to within these past 2 weeks, but you know, we're still coming out in profit. And that is just the reality of trading. It's not about super high RRs and super high win rates. It's like a mixed balance between them. And you know me, I'm not going to hide my losses from you. If I take losses, I'll show you my losses, because that is the reality of trading. And when you're learning to trade as a beginner, that can be one of the hardest parts, when you're taking losses and you feel like, you know, you're not doing something right. Part of being a profitable trader is taking losses and just managing them well. So next up we have Aussie dollar. This is a trade that we've been following. It's been in a nice uptrend for a while. Now there's a few ways you can analyze this trend, okay? So we can see these highs collectively. And if you want to actually take the parallel from that, boom. Okay, so when we're looking on the daily, you can draw this gradient and you can see that price is sort of constrained within that, just like that. So we're looking at this as a channel, and if we look on the 1 hour, we saw the bounce from there. So we're looking on the 4 hour here. We had this impulse, this correction, breakout higher, and what we were looking for is from this, is it that ABC? Let's double check. 1, 2, 3, broke higher. Yeah, perfect. So that broke out higher, had a break of structure. Let's look on the 1 hour so it's cleaner. You can see this was our corrective structure. Let's make that parallel. Just like that. So price push higher, ABC, broke out, support, pushed higher. There was our break of substructure. And our idea was from this low to this high, up there. We look for that to retrace, pull back to one of our levels, stop just beneath the low, and TP back up here. Again, you can see we were unlucky. We just got swept out on that low. It would still been drawdown if not anyway. But yeah, our idea was this to be impulsive, correct, break out, come up, and then continue higher. Unfortunately, it didn't. We took a stop loss and we lost 1%, and that's just the way this one went. Nothing more to it, nothing less. So that was minus 1%. So that first week, we took quite a lot of trades compared to usual, but we actually lost 2%, which is fine. Running total still plus 18% for the year, which is really good. This was last week, so just coming up to the end of Q1. Okay, now week 2, so this week that's just gone. And spoiler alert, we made money. We kind of made that back, but basically just break even for the 2 weeks. And we're now back up, closing out Q1 with a 20% gain, essentially. So it looks like I'm taking a lot of stop losses to a beginner, but that is just the reality of trading when you're making decent amount per trade. So I'm able to make 20% in my first quarter of 2025. If I continue that for the year, I'm up 80% for the year. Okay, you can do the maths on that return on a funded account or compare that to hedge funds and discretionary traders and stuff. This is a very excellent record. Okay, so don't get put off by trading with all these stop losses. You can add up all the numbers yourself as I'm showing you, and you can see that this is how you make money trading. You take more losses than you'd think, but your wins definitely make up for it. Okay, so speaking of that, we've got 3 more losses to cover. Okay, one of them, I'll be honest, shouldn't have actually been a loss. I should have took a TP1. Using that candle body close, it kind of depends what time frame you're looking at, and I kind of got a little bit distracted from what I should have been doing. I should have played that one safer, and I'll show you that when we get to it essentially. But yeah, week 2, pound US dollar, not as many trades in this second week, but we'll take a look at that. Pound US dollar, first trade of week 2. This was on the 24th at about 11. Perfect. Up there. So check out EMA, check out Asian session. So you can see here, part of our strategy, price broke the Asian session and now we're trending, making higher highs and higher lows. I believe that would have been on the 5 minute, no, 2 minute. So let's check the 2 minute. And we can see here, as price is pushing higher, we look to have a very sharp and strong bullish trend pushing higher, where we were looking to catch a trade from there, from that low. Very tight trade. We were looking to catch a trade from there, stops just beneath that low, TP there. Unfortunately it didn't happen. The trend stopped as soon as we got in, had a head and shoulders, broke lower, we lost 1%. Next up, New Zealand on a day trade. So let's take a look at New Zealand. This was like that, boss, looking at on the third break structure on the 25th at about 10 a.m. there. So we had this upwards trend, broke beneath. So that is our breaker structure. And then you can see this was our substructure. So that's our breaker substructure. Unfortunately, I missed this first trade on the Monday because I was occupied intraday trading, but this would have been a nice trade following the boss system. So from that high to that low, like that, price retraces up, comes off a key fib level, could have even caught that off the 78.6 there, stops just above the high, TP at that low. That would have been a nice 3.3% if we caught that one. Unfortunately, I missed it because I was day trading on the smaller time frames intraday, but that was one that we missed out on, would have been 3.something%. Instead, we looked at that as the third breaker structure, like that, and we looked for price to retrace from this high, from this low, came pushed up, take a sell from our key fib levels, stops just above the high, TP's down there, and as you can see, unfortunately we got swept out of there, and that was a minus 1%. Next up, we've got the euro US dollar on the intraday time frames. So let's check it out on here. The euro, and this is the one that we said should have actually been a TP1. So I'll go over that now just so you can see how you can avoid this mistake for yourself, essentially. But this was on the 26th. 2-minute time frame just before 10 a.m. 26, 2-minute time frame, 10 a.m. Let's go to that. So, classic, what you see is Asian sweep, swept the low, change character, high and high low structure. That's nice. That's what we want to see. And then from this trend, higher highs, high lows, high highs, high lows, took the fib from this low to this high, just like that. We had our entry, so we had our rejection candlestick from the 61.8. We looked to catch an entry from there, which we did. Could have even got a deeper entry and got a nice 3.4, even better 3.6, but we didn't. We got it from the 71. Now, we had nice support, pushed up higher, and this was when we were live on Wednesday, so you can watch this back live. I had my TP1 here, okay, and we were like 2 ticks off from hitting TP1. But realistically, what I should have done is looked on the 5-minute time frame, and had my TP1 from there instead. And that's the mistake that I made. And this is a very, very mechanical strategy. The only thing that's really subjective about it is which candle body do you use on which time frame. And this is an instance where I slipped up, should have been safer and took it from there instead of like there, like I was aiming for. There wasn't much in it, it's only like 0.13%. But if I did that, we would have secured a TP1 at about 1.9%, and then the rest would have gone stop loss to break even and then cashed it out. However, I'll be honest, you can see this on the live, I'm very transparent. What I did is I actually were aiming 2 ticks higher than price went, aiming for this candle high instead. We missed it and then actually hit a stop loss and lost 1%. So you can see that I've factored that into these results. I've got that down as a minus 1%, even though we should have really took a TP1 on that if we followed the strategy a little bit safer. Last but not least, the trade that makes up for all of that is the next trade on the euro, where we hit TP1 and TP2. This one was on Friday on the 1 minute time frame. It's actually the 2 minute time frame on the 50, but I just looked at it on the 1 minute time frame there on the 100 EMA. So this was Friday morning at about 9:30, I believe, somewhere like that. So same idea. Price broke beneath the Asian low. So you can see it swept the Asian low, but it didn't actually take out the Asian highs. Instead, it changed character lower, and that same idea that we have where price breaks the Asian low and then makes lower lows and lower highs, we're looking for price to continue lower from there. So you can see the wave structure: low, high, low, high, low, high, low, high, low, high, low. There you go. We're looking to continue that trend and ride it lower. So what we saw is from this break of structure lower, forming a lower low, we took our fib from this low to this high, waited for price to come up and show us some rejection. We didn't have that rejection up until this candlestick. So you see that doji candlestick coming through that EMA? That's when we actually took the trade. So you can see that there. Stops just slightly above the high. TP's all the way down here. It says 6R there, but when we actually called it out, it was like a 5.7. So we caught it on the 1 minute from that EMA. Stop was probably just a little bit looser. Yeah, it was a 1.7 pip stop. We caught that, rid it all the way down. We took TP1 here at those previous candle body lows, like that, and we cashed out. It was about 4.7%. No, 4.06%. Okay, I learnt my lesson from that last trade, and I called it from the 5%, the 5 minute TP1. So it would have been a bit more like that. Yeah, that makes sense. So we cashed TP1 at about 4.06%, taking half that position out, just like that. And then TP2 we hit at our bottom there for about 5.7%. So obviously we took 50% out there, we took 50% out there. All in all, we made about 4.9% from that. So we took a lot more stops than we would have liked in this past couple of weeks, but we still managed to make about 2% within week 2. Week 1, we lost just over that, like 2.1%. So all in all, we are slightly down from the last Sniper Sundays, but only by a tiny bit. We've gone from 20.35% to 20.1%, give or take. So yeah, that's almost closing out Q1. It's a bit annoying, but Monday is obviously the 31st of March, tomorrow as you're watching this, and then we'll close out Q1. But I'm very, very, very happy with them returns. 20% in our first quarter of the year is absolutely phenomenal. Like I said before, if you're able to make 20% in a quarter, you're making 80% a year, which is double what the best hedge funds give for their clients, essentially. So something as a lesson for people as traders, you don't really know what to benchmark yourself as, because everyone's quoted making 5% a month is good, making 10% a month is good, whatever. Comparison is the thief of joy. Everyone, when you're learning out trading, you don't really know what is a good return to make. So I'll tell you, the only real benchmark that you have for beating the market, in quotes, is if you're performing better than the S&P 500. If you're making less than the S&P 500, you might as well just stick your money in that and just leave it at that. It'll make about 10% a year on average, but that is what people consider a good investment. The S&P 500 is considered the market. Whenever you hear people saying that they're delivering market beating returns or whatnot, they're comparing to, I've made more than what the S&P 500 could make you. So therefore, if you give me your money and I trade your money, I'm performing better than if you invested it in the S&P 500. That is the statement that people say when they're talking about things that beat the market or not. 10% a year with a proper trading strategy is quite easily achieved as long as you're actually following a decent strategy. We've just made 20% in the first quarter. Okay. Another benchmark is somewhere between 40 to 50% a year, and that's what your top hedge funds will pay out. So like same logic with S&P 500, if you're not making more than 40% a year, you could just go with a top hedge fund. However, they're going to take 20% performance fee of your money. So it actually dilutes down to about 32%. You've also got 2% management fees and whatnot, and you're not liquid, etc, etc. It's not you making it for yourself and stuff. So they're the only benchmarks that you can really compare against as a trader. If you're comparing yourself to dickheads on social media, you're in the wrong headspace. I admitted I'm a sucker for this too. On these videos I'm completely transparent. You can see that I call out all of my losses on here. More losses than I'd like to call out, to be honest. But you can see that I add it all up and I'm making money. However, I don't fucking do that on social media. No way. On social media I'm showing you all of my wins. And I'm not posting these. Maybe I'll post the odd few for transparency and stuff. But I'm kind of, my conscience is clear because I'm showing you my full transparency here. But this is what everyone doesn't show. All the other traders don't show their losses like this. Mainly because if they did, you'd see that they're not actually profitable. So when you're comparing yourself to other people's wins, or this guy posted a funded payout where he's made 10k, you don't understand that guy spent 15k on challenges. And you don't see behind the curtain. Look at what the professionals are doing. Audited track records. I try my very best to track record everything so you can see the wins with the losses and the end result. Other people don't do that. So when you're looking at your returns, don't compare them to people on social media because they're only posting their wins and they're not showing their losses, okay? It's quite rare that people will do what I'm doing with this Sniper Sundays, where I'll say, look, here's all my wins, here's all my losses, here's what I've made. And you can see within the group, it's true. This is what real trading is making, and that is a very good return. But yeah, in terms of a benchmark, the S&P 500, are you making more than that? Year to date, it's fucking down, lads. It's minus 1.5% down. So if you're break even for the year, you've made more than the market. So it's not actually that hard to beat the market. Okay? People are going to laugh at that and think, no one beats the market, even Warren Buffett can't do it, etc, etc. In forex it's possible. Just find a good strategy like this that can make you a market beating return, and you just follow it and execute it. Don't get me wrong, it's took me years to get to this point, but I can show you how to do it as well. Apart from that, the only other benchmark is, can you beat the top hedge funds? They make about 40 to 50% a year. We're on track to do that so far as well. But yeah, enough blabbing on. That's 2 weeks worth of trades that we've missed out on. The running total is now 20% from Sniper Sundays. Hope these videos are proving really useful. Check out some of the other services that we run. So we run autopilot trading, where it's essentially an automated trade copier. And we've also got plug and play trading, which is a little bit like a co-pilot system. It'll plot the trades on your trading view for you, and you just need to place it for yourself. So like having a co-pilot. Obviously the signals and analysis group, the Discord is launching soon, but at the moment we're on Telegram. You can get in for as little as £1 a day at the moment. You spend more than that on coffee. Invest that in your education and be making more than hedge funds if you're trading right, essentially. And then obviously all the other stuff that we're doing as well. But yeah, appreciate it if you made it this far. Hope everyone's enjoying it and finding it valuable, and I'll see you in the next video, or I'll see you live tomorrow. So peace guys, and take care.